Oh, very good morning, good afternoon. Hey, Brian, Mark, good to see you. Najam, hey, Osho, TM, Rajiv, Stephen, Sue, morning, morning, folks. All right, hope everybody's doing well. We've got the NVIDIA earnings out, and phew, no major worries. So that's a nice relief for this morning. Yeah, hey, folks, hope everybody's doing well. We'll look at a couple of opportunities today that are standing out to me. It's a bit of a chippy, choppy day, so to speak. Um, but I do still see some opportunities, so we'll keep an eye on that. Also want to discuss euro dollar as well. Um, Remember, before we get into the markets, remember there's five core elements to trading: trading psychology, knowing the macros, understanding sentiment, technical execution, and risk management. All five of them need to be together, right? You can have a great strategy, good macro knowledge, good sentiment knowledge, but if you're not managing risk, then everything unpicks. So you need all five of those elements. And what we're focusing in these sessions is elements two and three. What's the macros? What's the current sentiment? And that can provide us opportunities in FX, indices, you know, metals, crypto, whatever. If you're brand new, don't forget, please go through the course. A lot of this webinar is based on our macro fundamental course and our risk events trading strategy. And in terms of our daily preparation, the things we're always looking at is the news feed to give us real-time breaking information and ongoing market analysis, the interest rate tracker, so we can see if there's any interest rate expectation shift. This can often produce tradable opportunities. The implied volatility tracker, based on the options market, we're going to be using dollar yen 55.65 today, so we'll cover that later. And they're the kind of the cool core tools that we use day to day. First thing to look at as we go into the session is the 6:30 a.m. It's usually around that time, European Open. And the first things that's standing out is one, as we looked at yesterday, NVIDIA posted stronger than expected earnings and was upbeat across the board. That gave equity markets overnight a little bit of a lift. And if we just go over and have a look, you can see ES supported, NASDAQ supported. Remember, NVIDIA has about a 13% weighting in the NASDAQ supported. So lovely support coming into equity markets. FTSE 100 continuing to making all-time highs and volatility dropping lower. So look at this. Markets relieved post NVIDIA earnings, volatility falling. Remember, there was a couple of announcements this week. So NVIDIA earnings is obviously a relief for tech stocks, and some news by Anthropic that they're going to be taking a more collaborative than combative approach when it came to their product offering, and that's given the Nasdaq a little bit of a lift. And remember the Magnificent Seven, those big tech name stocks, they're disproportionately impacting equity markets. Don't forget though, any moment, all of a sudden, the technical tech scare trade comes back. So just bear in mind that that's around there. But for now, for this morning, sentiment is positive. Bond market flat, nothing really much going on in there. Commodities remain supported. Copper continuing to gain after China's come back from holiday. WTI, Brent crude being pushed and pulled around on these US-Iran headlines. Just going back to what's going on, we've seen the US equity futures supported from NVIDIA's earnings results. Okay, so that's good. We've got Bank of Japan's Governor Ueda said there's no change from January to the BOJ's projected timing for hitting its price target, and inflation is expected to re-accelerate from the current slowdown. There's been a lot of focus on BOJ policy. It's most likely going to be unchanged. Read a nice little bit of analysis from ING, and they said the two new board members that are coming on are roughly equivalent to the two old board members that are going off. So one who's going off is an ultra dove, so one being replaced by a dove. One's neutral to dovish, being replaced by a dove. So does it really change the voting policy? No. And if there's too much political pressure, right, on the Bank of Japan from the government, it's gonna destroy the yen anyway. A bit like we've seen in the US with concerns about Donald Trump. If the Federal Reserve loses its independence, that's a disaster, right? So if the Bank of Japan loses its independence, that's a disaster too. So that should be self-writing. At the moment, the yen is under pressure due to the perceived dovish Bank of Japan signals, right, and risk on flows. So just taking a look at the yen, right, it is the strongest currency today, but with those positive risk on moves and the perception that the Bank of Japan is likely to be dovish, I wouldn't be surprised to see the dollar yen finding some dips. So what I'm looking at today is this implied volatility level at 15565. That looks very attractive for potential dip buying on the dollar yen. You can see it's roughly equivalent to this trend line that's being tested. So I know, how did you handle the dollar yen long last night, TM? I was thinking about you and you, Osho. How did you handle that? I know that both Osho and TM were long the dollar yen. There was that 55.50, which was an implied volatility level from midweek, which was a perfect entry. Yeah, nice, TM. Excellent. I think that's exactly right. Up at those highs, good level. You can see it's nearly hit that sort of that flag pattern. There's the flagpole. There's your ultimate target. So not too far off. We're having a retest of that level. Okay, nice, Osho. Well done, both of you. I think that's good ways of handling that. Obviously, NVIDIA was a major risk, and we could have seen significant volatility in the yen, right? And we could have seen a lot of strength in the yen. So you were both right to take basically the majority off between the two of you. So well done. This remains a buy bias, but I'd say a 5 point stop, try up to 3 times. So this is the 65 level. So that is just if we go back to this implied volatility low. That would be a very sensible place to buy. Now, if I got straight through that and it was dropping, the 5487 is also another good level. But that's all the way down there. But I wouldn't be that 5487. That would also be another good level, all right? And like just with a 5 point stop and try a few times. So just watch out for that. Set an alert on or something. Those two levels. That's the one that's most attractive to me there. Obviously, you had that 55.50. Osho's still in, and that's not unreasonable. You don't want it to go back against you, but you can see that dollar yen's continuing to grind its way higher. Only thing to be aware of, Osho, is once we get to 157 and 158, that's intervention territory. And remember, the US did do a rate check on the dollar yen exchange rate. So no one wants the yen to be that weak, including the US now. Expect heavy sell interest up there. Once you start hitting 157, you want to be trading stocks relatively tight. So that's the dollar yen trade. The other event that we've had today is Europe ECB's Lagarde speaking, right? Continue to expect inflation to stabilize, 2% target medium term, continue to follow data dependent and meeting by meeting approach. Now, there isn't really much significant data out for the ECB, and what we're expecting to the year end is the ECB to stay flat. So there isn't really any major drivers for the euro. So that means it's a bit sort of range bound in the euro dollar at the moment. There's no strong reason to be really massively buying the euro right now. So I do still favor on balance a little bit of euro dollar downside. And I'm looking at this region here, the 1.1807. I know that the euro dollar has been very choppy, but if you look at it from a technical perspective, technically you can see this long rejection at 1.2, big hammer reversal. We've had a retracement up to that level, sellers come in, and we've got this false break of Harami inside bar moving back up to this level and then we're going back under. So I'm still keeping this major level alive, and any retracements up to there, I think that's suitable for selling. Right? This is that same line, right? Get above, right? Stay long, get underneath, go short. On balance, I favor shorting, but both options are valid there at this level, the 1.1800. And technically, that's like a retracement up to these shoulders here, this Harami bar. Do you see that's like false break, attempt at a break here, right? So that's what's going on in the euro dollar. And that's my level here, this 1.1806. Now, in that line, we've got US data coming out today. Not like major movers, initial and continuous jobless claims. We continue to see a strong US labor market. As long as the labor market remains strong, that means the Federal Reserve can be on that higher for longer narrative. They don't need to cut interest rates aggressively. The board took out references and concerns over the US labor market at their last interest rate meeting. So as long as that remains strong, that should keep the dollar supported. Then we got 7-year bond auction and Japanese CPI coming up later. That could influence the yen bias. So just be aware of that. If that starts coming in hotter than markets are expecting, then that could give the yen some strength. So just to be aware of that, if we do get triggered in to the dollar yen trade at either of those levels, the 155, 6.6, 6.7, right? Just to be aware of that Japanese CPI coming out later tonight. Yeah, and euro pound, I'm still in euro pound as well. I've got no problem with holding that. I've got euro pound in as a swing trade. We've moved back down into that support level here. You can see on the weekly, we've got this inside bar pattern that's trying to form, and I don't see any issue with holding that. The yield spread is still supporting euro pound upside. So we're still holding above this trend line and above this channel. So that's absolutely fine. I don't have any problems with, and I'm in this as well, Osho. And so I still think you can see the yield spread still trying to push higher. And I think the reasonable target is the 8,800. Okay, stops just underneath the 8,465. If we get underneath this trend line or back into that channel, then okay, fine, I'm not interested. But for now, I'm expecting this to build. That's a weekly time frame, and just happy to hold that for today. Okay, all right, folks. So a little bit of relief, really. Oh, the other major issue is the geopolitical risk with US Iran. That could trigger a dollar rally. And I just saw this little headline, which always rings a slight alarm bell for me in terms of intervention, was from the right, US open to new creative ideas. Where was it? It was a, hang on, here we go. It was US Vice President Vance see evidence that Iran is trying to build a nuclear weapon, right? US Secretary of State Rubio says Iran poses a grave threat and seeks nuclear capability. That's always been the great fear, that Iran develops nuclear weapons and uses it like potentially against Israel. It's a fundamental, issue in the Middle East. The destruction of Israel and Iran are fully committed to that cause. So a nuclear capability is seen as a grave threat to the region. So what that means is if Vance is saying that and Secretary of State Rubio is saying that, that can often be the statement before the justification for strikes. I think strikes are still seen as more likely at 60%, and the US is just trying to work out whether they can achieve their goal by using airstrikes alone. They won't want to put boots on the ground. It's very difficult to persuade and to win elections back home in the US when you're fighting wars abroad with US soldiers in matters that many domestic US residents just think the US shouldn't be involved in. So that could keep the dollar underpinned. So be aware of that. If we do see strikes happening, remember Saudi has said that they're going to increase their oil production. So I don't know, you might, if, to what a level will oil rise? You'll probably have a spike higher, but just be aware that Saudi have now said they'll up their oil to replace any oil that doesn't come into market as a result of the strikes. Iran can block the Straits of Hormuz. If they do that, then oil will spike regardless. But it could be choppy. Gold should be bid on geopolitical risk, and the dollar should be bid on political risk as well. So that's what I'd say. That's the only thing to be looking at. I think let's just check if there's anything else. Yeah, nothing else. All right, folks. So like clever trades, careful trades, not overcommitting and just being where you've got to be sort of quite agile on a day like this. That's my take. Brian's you're in gold. Yeah, well, that makes sense, Brian, because as we have the increased expectations of a potential strike, right, that's just supporting precious metals. And if you do get a spike, you're in it for a spike. Let me just have a look at it technically. Clearly very big, very strong market. Let's just get rid of that. Just want to get rid of those grid lines. There we go. A nice inside bar pattern that's trying to form a little bit of a coiling pattern going on. That's a nice level to kind of manage risk if and when we get above that symmetrical kind of triangle pattern, just a bit of coiling. Yeah, Stephen, would like to hear your rationale for euro pound. We have had some quite mixed data out of the Bank of England. So I could see an argument for it. Let's have a look at some of the latest Bank of England commentary. Right, that's a good thing to look at. Yeah, so here we go. So here's kind of the overall rationale for the euro pound long, folks, is the Bank of England is expected to start cutting interest rates, whereas the ECB, their interest rate expectations are flat for the year. So it's that divergence. Now, that divergence in monetary policy is what's underpinning this yield spread pushing higher. So looking for the euro pound to go up is the rationale. Now, the recent commentary from the Bank of England, if we just go and look at some of that here, right, you can see Bank of England's Bailey has said, where is it? Where is it? He's kind of the neutral guy. He's kind of the guy that sat in the, yeah, cheers, Stephen. I'll have a look at that in a minute. He's kind of sat in the middle saying there should be some scope for some further easing in monetary policy. This does not mean that I expect to cut bank rates at any particular meeting, but it means that I will go into the coming meetings asking whether a cut is justified. So in other words, what Bailey's saying, he's keeping that question open. Is a cut justified? We've had Hill saying in the past year has put too much weight on inflation target. Bank of England's Bailey said on Tuesday that the last week's inflation was roughly where they thought it would be. Good price inflation was lower than forecast, possibly due to China. Service price inflation has not eased as much as predicted. Not seeing a particular uptick in redundancy. So quite neutral comments. What else was Pill, chief economist, says in the past the Bank of England has perhaps put too much weight on inflation being at target as opposed to future risks. Need to see more progress on the indications of underlying inflation. On balance, risks are still to the upside in achieving the inflation target. It means there is caution in a further reduction in policy rates. Share a lot of the same views as Green. Green saying, I believe the disinflation process is still on track and the risk that inflation remains persistently above target has diminished, right? We might instead need to raise rates, but this could damage our credibility, which may in turn make it harder for us to convince the anchor inflation expectations. It's for this reason I believe it's appropriate to slow the pace of further cuts until we can be more confident inflation is returning sustainably to target. Forward-looking, right? So you've got this slight kind of. I think what Stephen is saying, right? He's looking at these technicals here and saying, hang on, look, we're going underneath this moving average, and euro pound is got pressure to the downside. There is a little bit of pressure to the downside in the euro pound, and the latest commentary from the Bank of England, Stephen, it's not like the Bailey said, yes, interest rate cuts are ahead, and Pill said, yes, they're ahead. They're being a bit on it. Now, that will mean incoming data will be very important coming up. And I think Friday we've got retail sales. It's always good to look at the rationale for what you're doing, right? Always good. Yeah. Yeah. So put that all together, what does that actually mean? Well, what it means is this. Hang on. We'll make sense of this, folks. Don't worry. There it is. Right. The yield spread's pushing up. So that means interest rate markets are still expecting the Bank of England to be cutting interest rates while the ECB are holding, right? So that's keeping that jaw. You see that jaws opening, right? Higher highs, higher lows, higher highs, higher lows. Technically, we've held above this channel. We've held above this trend line. So yes, we've got this little dip, and this could be a false break of the channel. It could be a false break of the trend line, right? That's absolutely legitimate. And I expect what Stephen is seeing, some short-term momentum is fading, right? And we saw that. Look on the daily chart. Look, we've seen that false break. We've clearly seen a false break at this level, haven't we? Right? Price tried to move up, failed. It knocked on the door 4 times. And you remember early in the week, I was saying I was looking for a breakout retest continuation trade, right? So clearly haven't got that, even though the yield spread is still pushing higher. So there is weakness there, and it'll come down to how the data really develops. Broadly speaking, the euro pound buy bias is still absolutely fine. Getting underneath, technically underneath that trend line back into that channel, then think again. So that's the risk. So all you've got to make sure is that your risk is managed. Okay. As it stands, technically, we're holding above that channel and holding above that trend line. So on the weekly chart, and you remember, this will come down to time frame. So in short term, you'll be looking for a little bit more of a drop. And you remember, we're looking for buyers to come off of this level here at the 8,700. So we might get another drop down before buyers build up and have another test at that level. So some of this often comes down to time frame as well. Okay. So for me, a swing trade, I tried a short-term opportunity first of all, which is this test of this level here, right? And then I was taken out a break even, right? As we went back down, looking for a break, I didn't get it. Take out a break to even, but re-entered as a swing trade. So a different risk parameter is the key thing to be aware of. But I hope that makes sense. Thank you for that symmetrical triangle formation, Najam. And Stephen, thank you for showing your technical chart. And you are right that you are to detect some near-term weakness. That is correct, right? But the bigger picture, the euro pound buy bias, it's still there, because the yields are still supporting it. Okay. Now that's not saying it couldn't change, and it has weakened. And those latest comments from the Bank of England have been less positive about interest rate cuts from the Bank of England, and that's really why it's happened. But short-term interest rate markets haven't changed expectations that much in a week. Does that make sense to everyone? Can you see sometimes it's like it's a bit of a grey area, and sometimes it comes down to your perspective. Does that make sense, Osho? Stephen? Right, yeah, that's good. Okay. It's good to question, because you should always be able to question every trade, right? Always, right? And you should always think, is this right? And also, you can get blinded by your own trade. And remember, it's one of the weaknesses of macro analysis is you can become blind to your. You can. I can't remember what it. I think if Mark's here, he can tell me. What's that confirmation bias when you only read the analysis that confirms what you're saying? You know what I mean? You only read the analysts that are bullish the dollar. Yeah, that's it, TM. Yeah, and there is a grey area to it. And sometimes this is a really good point, because it's the major weakness of macro fundamental trading. And I've seen it before. There was a guy a few years ago who had a great track record, macro fundamental trader, and it was I think it was the Reserve Bank of New Zealand. He was expecting them, I think, to start like cutting interest rates, and the narrative went from they're expected to cut interest rates to not cut interest rates, right? So the narrative changed, but it took place over like about 6-7 weeks. But as the narrative changed, he couldn't just let go of the trade, because he just couldn't do it, right? Partly because of the fact that he was over leveraged, and then he didn't want to lose his track record, so he just couldn't close the trade. Yeah, do you see? Yeah, good, excellent. So we'll keep an eye on that, and this will be a good case study for us going forward, right? Looking at the incoming European data, UK data. It's one of the reasons why FX trading is quite hard, because there's two central banks, there's two sets of data going on. And, this is a story that's changing every day slightly. But we're using the technical. So if I'm wrong, where am I out? Worst case scenario, I'm out here, 8645. But in reality, once I start getting under this level, definitely back into this channel, forget it. Yeah, well done, folks. Good work. Really look forward to seeing you later in the futures room, and hopefully we'll get a little bit more upside today, posting the video and a bit more action. So do take care, and I look forward to seeing you later. Thanks for your contribution, everyone. Yeah, nice one, TM. Me too. Take care, folks. Bye for now. See you later, Najam. Thanks, mate. Bye.